All right. Hello, everyone. Today is Wednesday, May 7th. Welcome to another episode of the Wall Street Rundown. I'm your co-host, Billy. Got Wale with me. What's going on, Wale?
Not much, man. How you doing?
Man, the stock market is, I didn't know what to do today, so I kind of just chilled, man. It's like, but shout out to Ronnie, man. Ronnie hit like almost at 500% toward the end of the day on SPX.
Oh,
Boy,
on the
got
way
some
up?
on the way up. Yeah, that quick pop that we had like right at the end.
Hmm.
Yeah, man, he hit that. So that was good. Shout out to him, man. But today's May, Wednesday, May 7th, 2025. Stock market kind of closed a little high. The Fed decisions and all that stuff kind of affected a little bit of the investor optimism and all this stuff coming up with China trade talks and all that. Is there a talk? Is there not a talk? We have no idea. But overall, the major indexes performance was good. Dow Jones Industrial Average closed about 0.7%. S&P closed at 0.4%. Nasdaq 0.3. Russell's 0.3. So not a crazy move, but it was enough to move the market a little bit. So the Federal Reserve decision, they have kept the interest rate unchanged. Jerome Powell emphasized cautious approach amid economic uncertainties, including inflation risk and ongoing trade negotiations. Now, he threw me off for a loop because when he said the inflation actually went down, I was like, where is that? Where is that happening?
So let me give you some context behind that. So when he was saying that inflation has come down, he was talking about in reference since they started raising rates from 2022.
Gotcha.
So
Okay.
that's what he was talking about here. So if you go back to 2022, when we started raising rates and we started our restrictive policy, from that point till now, inflation has come down. So that's what he was referring to.
Man, but that's kind of deceivable, right? It's like, let's just look for this period of time right now. We're not looking at like from 2022. Can we look at on the beginning of this year to now? How is
Hmm.
inflation looking like? So I feel like that was kind of a little bit of deceptive move over there, but it is what it is. um, but I don't know, man. Like, what do you think about what Jerome talked about when it comes to like the economic conditions and how things looks like right now?
Yeah, I really feel like the Fed is just as clueless about the future and tariffs
Mm-hmm.
as many of the CEOs and the CFOs that have been talking about their earnings reports moving forward. We still have not seen the full impact of tariffs on
Right.
the labor market and on the consumer. Again, the unemployment is still at 4.2%.
Mm-hmm.
Fed looks at that and says, okay, things are fine. PCE has crept up a little bit higher,
Yep.
but not enough for the Fed to actually need to take action on rates. And what I have been saying and how I feel personally about the way Jerome Powell feels is that he doesn't want to do what Paul Volcker did back in, I think, the early 70s or in the
Yeah.
70s, where they cut rates and then had to raise rates again. I think he's trying to avoid that at all cost. So when you can't give or when you don't have a clear how should I put it? You don't have a clear sense of what, the tariff policy will do in the future and you can't like make projections. The
Right.
best thing to do is to stay put. And I think that that's what he was telling us, and you can really sense the uncertainty in his voice
Mm-hmm.
and in their projections. And
Right.
they have emphasized that it's going to be really, really, really hard for us to make decisions based on this on and off policy, right? Another thing, a good question someone asked him is, what are you going to react to first? Are you going to react to prices first, or are you going to react to the labor market first? At
Mm,
what point, which one of the two is going to make you react? And he
right.
basically says, we'll probably look at the one that's furthest away from its goal.
Hmm.
So we'll just have to wait and see what happens with that. I also feel that there is still wiggle room for higher unemployment and higher inflation because if you look at their last report, their projections, I think they projected unemployment to get to 4.4. And I think they expected inflation to be a little, PCE to be a little bit higher. So we'll have to wait and see. But to me, this Fed meeting was a bunch of, we don't know. That's the way I see it.
I mean, pretty much. Like you can even see how the market kind of reacted to it. It's like,
Mm-hmm.
should we sell? Should we stay? It's like, and I found it very interesting that right before Jerome jumped on, Trump was giving a press conference or something like that. I think he was talking about some China stuff also.
Mm-hmm. Mm-hmm.
So I was like, man, the coincidence, man. Like,
Coincidence? You think that's coincidence?
I don't think it's coincidence. But I just find it interesting. It's like, hey, Jerome is talking. Let me get up there and talk too. So like, I don't know if it's like a ton of cause distraction. I mean, it's definitely ton of cause distractions. Because if you guys
Mm-hmm.
remember last time when FOMC was going on, also the same thing happened where Trump was talking, Jerome delivered some not good numbers. The market ran up. The market ran up because Trump was talking. You know what I mean? So it's
Mm-hmm.
like now you starting to see this, like there's always it's some type of conference call or conference going on at the same time Jerome is talking. So I think it's like kind of distract people a little bit from some of those numbers. And again, with him talking about inflation up to date from, like, let's say from the first time they from 2022 or something like that. But if you look at inflation right now, I think it's creeping higher actually. I don't think it's lower.
Yeah, I think on a month to month basis,
Mm-hmm.
PCE has moved higher.
Right.
So if you look at where we were back in March, and if we, I mean, not in March, in February, and then I think what came out was it, what just came out? Did April
Uh,
just come out or March just come out? Let me see.
for what?
PCE.
PC, I think that was April.
No, that was March. So the March number for PCE that we got on
Oh,
April
okay.
30th, yeah, that was March. So
Mm-hmm.
um, that number compared to February was a little bit higher. So um, someone also asked him, and you can kind of tell that he had to really think about the answer before he answered the question. Someone asked him, "Is there, based on what you're looking at, based on all the uncertainty, do you even have an incentive to cut this year?"
Mm.
And he had to wait and think before he answered that question. I'm in the camp where I do not think they're going to cut rates
I,
this
th- I
year.
I thought they were factoring in three this year.
Two, I think. Two.
Okay.
So I think right now they're factoring two rate cuts this year. I'm in the
Mm.
camp where that number is going to be zero
Yeah.
unless something catastrophic happens where they feel like they need to step in right away.
Yep.
Um, but when a reporter asked him that question, he had to sit there and
I
think
had to think about it.
really hard before he answered that question. I don't think he was expecting that. Um, but again, I mean, at this point, to me, it's anybody's game. It's anybody's game at this point.
Mm-hmm.
And
Mm-hmm.
I do not, I don't think as the Fed is going into the next meeting, I really don't think that they know what they're going to do.
Hmm.
I really don't.
Which is kind of scary. Like the Fed has no idea what to do. Like yeah, that's gonna be interesting. That's gonna
So
be
because
interesting.
when they do all of these models and they do all these forecasts and they're plugging in numbers or estimates that they think are going to affect inflation, the job
Right.
market, all the data, you know, that they're inputting into their models. But if you don't know what to input, right? Your output or the output you get from your data is only good as the information you put in.
Yep.
And if you don't have accurate information to input into your models, how can you come out with a projection that you feel comfortable with?
Yep. Yep. Yep.
So, today we just heard Trump say that he has no incentive to take off the 145% tariff on China.
Right.
So it's
Which
like,
is for me is like completely contradictory. It's like
to what he just said,
right.
exactly.
Like you
So
say you're sending people to go talk to China, and now you're saying like, nope, that's absolutely we're not
yeah,
taking that off.
he's
Like,
saying, yeah, we have no incentive to take off the 145% tariff on China.
yep. Yep.
So trying to figure out what's being tariffed, where the exceptions are, what's not being tariffed, who you're
Yep.
making a deal with. all of this conflicting information, the Fed is like, we're stuck. What
Right.
do you want us? What do you want us to do?
Right. Right.
So I think they did the right thing by just holding rates and not really saying anything different
Mm-hmm.
because again, what they don't want to do, they learned their lesson about the transitory thing, right? Where they gave their projections, they had their assumptions, and they were way off.
Yep.
Jerome Powell does not want that to happen again. He's
Absolutely not.
avoiding that by all costs.
Yep. Yep.
So yeah, it's just a wait and see approach. And if you look at how the market traded today, going into the Fed meeting, right, we saw a downturn. We saw a
Right.
little sell off. So I was able to place some puts before that. And then during the meeting or after the announcement, you saw a little bit more of a pull down. And then during the meeting, towards the end, you saw the market rally back
Went up. Yep.
higher. So even to me, even the market doesn't even know what to do about
Right.
all of
Right.
this
I mean, that
mess.
last rally was because President Trump signed an order, I guess, for the chip to be able to allow them to sell to other countries. So I
Oh,
think I think
okay.
he kind of loosened that restriction a little bit, and you can see Nvidia kind of ran up right after that too. Nvidia was up, I think $3 after the market. Well, yeah, the close up like $3 up or something like that. But I think that was based on that. I think that's why we had that run up right toward the end around like 3:45, 3:48 p.m.
Okay.
But
Yeah.
I wanted to ask you, like, how did the bond market react? I know you keep track of the bond market and stuff. How did the bond market react to the FOMC and what Paul had to say? Because I know we talked a lot the bond last time, and it didn't look really pretty.
Yeah, give me one quick second to pull up my 30-year treasury number. So right now, bond futures are flat. So we didn't really
Mm,
see, there wasn't really much of a reaction. Now, today, bond prices went higher on the 30-year. And then let me look at the 20-year real quick and see. 20-year was up a little bit, but right now after hours, just it's flat. So
it's
not
down.
much of a reaction today. So yeah, I really, how should I put it? The market is really on, it's really on eggshells, to be honest with you.
Yep,
It's really on eggshells. And
I agree.
as a trader or investor or anybody who's trying to make projections, it's kind of just like running through a landmine field. You don't know what you're going to run
Mm,
into at
right,
this point.
right, right.
So,
But
um,
but I'll say like long term, I think if you have a long term strategy, I think stick with it, right? Long term, I think
oh yeah,
we
for
always say
sure.
that. We always say we're gonna be okay long term, but it's like those short term gyrations and up and down and all the stuff. This is very stressful, man. But long term, if you're an investor right now, man, like I said, there's some really, really good stocks that's like really, really low, below 200 EMA and all that stuff, and they're looking good. So, yeah, I'll say long term, you're good. Short term, don't blow your port.
Yeah, my
uh,
my my thing with the long term aspect though is that as you're adding to positions that you like, the one thing that I still fear that is a possibility that is out there, but we haven't seen everything yet, is I
right.
still feel that there's a threat of stagflation because we know that growth is slowing down across the board. I think
Mm-hmm.
that that's very evident in the job market. That's very evident in some of the projections that some of these companies are giving, and we're seeing inflation isn't going anywhere. And based on tariff policy, I don't know if inflation is going to come down anytime soon to a place where the Fed will feel comfortable about um, cutting rates.
Yep. Yep.
So until we start to see that, because again, I Liberation Day was what? April
April. Yep.
2nd. So
Mm-hmm.
until we start seeing the April data and the May data and the June data, to me, even if you are an investor and a buyer of stocks, you still need to be strategic about how you're doing that, in my opinion.
Right.
Because
Right.
again, if the market starts to sniff that, okay, things aren't as rosy as we think they are, we could potentially see another pullback. Now, are we going to pull back all the way to the low that we saw after the Liberation Day drop? I don't know. But I still think that there are certain things that are unclear, but
Yep.
we can't make assumptions until we get the data. So,
Yep. Yep. I, I'm in the camp that we probably will pull down to that low and blow past it, depending on if we get some crazy information that that spooks the market. You know what I
mhm.
mean? Because we have a lot of levels that we need to still kind of go down and take those unbalance off. So we have like a on SPY, there's like a gap that need to fill down to like 529 around that area. And then we had that bounce at 481 that we had back in April 7th. So it's like there's definitely a lot of imbalances that I see on the charts that we need
Mhm.
to go back and kind of cover it up. So you never know. I mean, all it takes is one bad news that the algorithm sniffs, and the next thing you know is a crazy sell off.
Yeah, and
But yeah,
I'm looking at SPY now, and you can kind of see that it is floating in that 200 EMA
I mean,
area, and
yeah,
the 200 SMA is at 573.16.
mm,
To me, until we get above that, I still feel caution is needed.
yep,
And then as we look at QQQ ran right into the 200 EMA, pulled back, and now is the 200 SMA
mm-hmm,
pulled back and is now retesting the 200 EMA. So, in my opinion, until we see a clear uptick above those levels, to me, the threat of pulling back is still there, in my
yep,
opinion. I just don't know what's going to be the catalyst
right.
to pull us back. But
It's always
I
a
mean,
catalyst.
yeah, I thought today was going to be a potential catalyst where we would see more of a pullback.
No, I feel like every
Um,
time, every time traders make such a big deal about FOMC, it doesn't happen. Like things are
yes.
just like, and then you get those little report that we get, whether it to be unemployment or PCE or something like that. Then the market like go
Mhm.
crazy. You know what I mean? So it's like, but the big one, like the GDP one, was nice. I mean, we had a quick run up, but it's like it wasn't a lot. It wasn't sustainable. You know what I
Yeah,
mean?
it only
But
pulled back for what that day, then it finished
yeah,
green.
yeah. So again, it's like I think now like paying attention to those little data might be able to offer some good uh potential move to the downside or even to the upside. So again, just keeping an eye on those little economic data that's coming up.
Yeah, I think market makers are the ones that won today, to be honest with you, because
Yeah.
what happens is a lot of people they straddle
Yep.
FOMC.
Yep.
So we didn't really get a big move. So probably got
Nope.
burned on both
Nope.
sides.
Because I saw a lot of when I went to my the flow algo whatever. There's a
Hmm.
lot of like a lot of puts on SPY and a lot of calls on SPY too. So it's like
Mm.
but the put on SPY that's at the end of the month is still there. Like
I
the
saw
ones I
that.
was talking about is still there. So whoever it is, they have some conviction that we're gonna drop. So I don't know if they are like hedging their position or it's more like they know something's coming.
Yeah, to me, that 200 EMA is an area where I feel that if we don't get above that, I think again, you have to really take every upside move with a grain of salt. And I'm actually looking
Right.
at Nvidia right now. And Nvidia, where did it run straight into? 200
Yep.
EMA got rejected
Yep. And got rejected right there.
and right on the nose.
Mm-hmm.
And that's kind of where it's sitting right now. So we'll see.
Yep.
We'll see.
Yep. There's a bearish fair value gap right there too. So
Mm,
it's literally sitting in that selling zone. So Nvidia has a lot of zones that need to clear before we can see it clear, man.
yeah.
It's a lot of selling pressure coming out from it. But let's move on to Apple and Google. So Google is in trouble, man. I think we talked about this last year where I was talking about how there is a potential monopoly happening with Apple and Google when it comes to the search engine, right? Because if you go to Apple right now, I mean, the main search engine there is Chrome. It's owned
Mm,
by Google. Google was paying Apple, I believe, a few $1 billion every year just to make sure that Chrome stays as the main search, right? But now you see that Apple's like, you know what? We're gonna do our own thing. You know what I mean? So they're planning on offering like their own AI search option on Safari. So what is that going to do to Google search and all that stuff? So let's talk a little bit about that. What's your thoughts on that one?
Yeah, so I think from the numbers that I heard, Google pays Apple $20 billion a year to
Yep.
make Google search the default search engine in iOS. 20 billion a year.
That's a lot of
And
money.
during the testimony, one of the Google executives mentioned that the user or the usage of Google search on Apple's platform has gone down.
Mm,
It has gone down. Less people are using Google search for on iOS.
interesting.
So, with that being said, now I can testify to that because a lot of times when I want to search for stuff now, I use ChatGPT.
Right.
I don't use Google as much as I used to.
Right. Right.
So I think his exact words were, it keeps me up at night.
Mm,
So Google got smacked today because search is such a big
big. Yep.
revenue driver
That,
for them.
I mean, that's how they start the business. That's literally the foundation of their business.
Correct. So with that being said, decreasing revenue with Google search, that's your biggest revenue driver as a business.
Mhm.
A lot of people were like, yeah, we're going to have to sell. I think Google was down 8% at one point.
Yep.
On Apple's front, Apple did not give guidance for their services revenue for next quarter.
Right.
That's also part of their business. Another thing Apple is having issues with is that whole 30% fee that they collect in the App Store. A lot of applications are redoing it to where you can just pay them directly and you can skip the Apple payment system.
Ooh.
It's another issue that Apple has to
Mm.
contend with as far as their revenue is concerned. So, how all this thing plays out, to be honest, I don't think is good for either one of these companies.
No, it's not.
No. So that's
They're
yeah.
gonna have to come up with something together because I believe is if one of them slack, both of them are gonna slack. You know what I mean? Um, and man, that's like the whole ChatGPT thing, man. It's like that's what happens when a company just slack off. Like when you sleep for like a second, you know what I mean? You sleep for a millisecond. It's like one little thing comes up and it just like takes over. You know what I mean? So with ChatGPT being like the main function, like a lot of people use ChatGPT. It's very easy to use. You can have a regular conversation with it. You don't have to like be like specific with it. You can just ask a question and it'll give you a bunch. Like it's crazy
And
that
go ahead.
that people are like using it more often than Google search right now. It's crazy.
And the thing that I love about ChatGPT, as you continue to use it, it starts to understand
It
how you
learns about
think
you.
and
Yeah.
how you ask questions.
Yep.
Because a lot of times when I search for stuff, it will ask me a follow-up question based on what I'm kind of already thinking.
Thinking. Yep.
And I'm
Yep.
just like, this is convenient. So, if there's one thing that we have learned throughout history when it comes to technology, if you are not innovative, if you fall asleep at the wheel,
Oof.
if you get too comfortable, someone will come for you.
Yep.
And the two examples that I always like to give, Blockbuster,
Blockbuster.
Netflix, right?
Yes.
AMD, Nvidia. I mean, not no,
Nvidia.
AMD, Intel.
Intel. Intel.
Yeah.
Yeah.
Intel fell asleep at the wheel.
Yep.
AMD came back and took over the chip business from them.
Yep. Yep.
So if you're not innovative, and I have been saying this for months, I don't see Apple as an innovative company anymore. I really don't see it.
Yeah.
Everything that they've kind of tried to touch to be innovative with, I haven't. I mean, the car, the Vision Pro, their whole AI thing that they said that they're trying to figure out, it's all been a miss so far. I'm
Yep.
not saying that they won't figure it out, but right now I'm not really like excited about anything Apple is doing. Um, so I was able to play some Apple puts this week, and I think somebody in our group, I forgot to post it, was able to swing them into today, and I think they made like a 70% gain. And I
That's
actually
nice.
think that Apple still has more downside.
Oh yeah. Oh yeah.
I still think Apple has more downside.
Where are they sitting at right now? They are sitting at
196.25.
yep. The next resistance level I have is the 189.81. You see that wick back from April 21st. If they lose that, yeah, this thing is going down to like probably around 160.
Yeah, I think Apple has more downside. And the level that I'm looking at now, because I was looking at resistance at 180, 198.30.
Mhm.
And then now I'm looking at resistance near 195.75. And if we lose 195.75 tomorrow, I might be looking at puts on Apple.
Mhm.
But I have not been a fan of anything that they have done or said. Um,
There's
in
no innovation anymore. I feel like
no,
ever since Steve Jobs kind of passed away, it's like nobody's excited about the company like that anymore. I feel
yeah,
like they're just maintaining right now.
I think so too.
There's no new innovations coming out.
Nope,
You know,
nope.
yeah. And just
And
because you have tons of cash sitting around doesn't mean you don't continue to innovate. Like I know they have a lot of money sitting, but come on, y'all. Like
yeah, and they don't know. To
do
me, they don't know
something.
what to do with it. And to me, when you have that much cash and you have $110 billion buyback, that tells me that you don't have any other investments or things
Yeah, that you're working on.
that you're working on. You're just
Yeah.
looking at buying back stock.
Yep. Yep.
And that is, I think they increased their dividend, which was, you know, that was small, but I don't know. I have not been a fan of Apple at all in the last, few months as far as a growth company. To me, they're a value company now. They're not a growth
Right.
company anymore. Yeah.
Right. Right.
Yeah. So
Speaking of Apple, the great Warren Buffett announced his retirement, man. He's hanging out his jersey. This man is 95-year old. And God,
what a
like, is
run.
this, yeah, what a run, man. Like, this man, and to do one of the most craziest thing right before the market start pulling back, my man took all the money off, sold a lot of stuff, and just chilling. You know what I mean? Like another legendary move before he left the before he leaves. But that's crazy, man. What do you think about that, man? I don't know if we're ever gonna see somebody like that again in our lifetime, at least. Maybe that person is just born today, but come on, man. 94 years old, running the Berkshire company for like 60 plus years. Like, it's crazy, man. It's crazy.
So the one thing that I will say that you can learn from Warren Buffett is you can be a successful long-term investor
Mm-hmm.
without the need to chase the sexy investments.
Facts.
Sometimes the boring stuff are the drivers of success, but you have to know where to look.
Mm-hmm.
And I got a chance to listen to some of the Berkshire Hathaway conference
Man, did you
over the
see that? Did you
weekend.
see how many people were there? That's
Man,
nuts.
yeah, there were a lot of people there. And what I took away from him is that he has a very specific method about how he goes about what he wants to buy.
Yep.
And another thing that I heard that was very interesting is that he focuses more on balance sheets than income statements.
Mm,
And he says that on the balance sheet, it is really harder for businesses to hide their weaknesses on the balance sheet compared to the income statement.
mhm.
Because you can get real creative on an income statement, right? But on a balance sheet, it's pretty much cut and dry,
Right.
right? What do you have? What do you owe? Is it going down? Is it going up? Things
Right.
like that. So he says he focuses more on balance sheets and income statements, and I thought that was very interesting. And another thing that you also I also learned about what he talked about is that he didn't get everything right.
Mm-hmm. Mm-hmm.
He talked about his mistakes. He talked about missed opportunities and areas where he felt he could have done better.
Yeah.
But the silver lining behind what he talked about was I stuck to my plan.
Mm,
And as an investor, as long as you do that, to me, in the long run, you'll be more successful. If you
right.
have a method that you stick with long term and not always chasing the sexy stuff and all of the hype that could be out there as you're making your investment plan. So
Right.
I thought that was really interesting. I mean, if you just look at his performance over time, I mean, you talk about impressive,
Impressive, man. My
an
man definitely
impressive, an impressive run.
he's a legend, man. So shout out to him, and hopefully he enjoys retirement and chill out.
Yeah,
Now the only thing I'm worried about is did he pass enough lesson to his successor to be able to follow the same principles? You know what I mean? So that's always there's always a fear with transition when you transition into a new leadership. Like, is that person going to be able to follow the same principle? Is that person going to be able to give us the same return as investors? So
correct. I will
it'll be
say this
interesting to
though.
see.
I think the brain trust at Berkshire, right?
Mm-hmm.
Because when we think of Berkshire, remember Warren is not making all of the decisions. He might be the
Decisions. Yep.
final decision maker, but the brain trust of everybody who's kind of inputting data and making decisions, I think most of them are going to still be around.
Nice.
How those final decisions are made might be a little bit different, but we'll just have to wait and see.
Yep.
So, when you think of Berkshire, don't think that this is all Warren Buffett. There are
Right.
people, analysts, advisors, and executives that are giving their input. He might, if there's like a tiebreaker or if there's a decision where people aren't really sure, he might be the final decision maker to say yes or no. But the collaboration of information is still going to come, I think, mostly from the same people. So,
Nice.
but
Nice.
yeah, shout
Yeah,
out to him.
man.
Yeah, shout out to him, man, because man, what a run.
Dude, that's a crazy run over there. You know what I
Yeah.
mean? One of the things that he said that I was like, oh wow, like he's true about that. Like he's like somebody asked like what happens when the stock market is going down. I don't know if it was like back in 2020 or something. He's like, who's benefiting from that? He's like, the rich people are benefiting from that because we have enough income, we have enough money to be able to deploy to the market because everything is cheap, right? So
Hmm.
he's like, that's the only people that really benefit from the stock market, the super rich people, right? Because
Hmm.
now you can, in those times, they understand like you can now double, quadruple, triple your, your investment at that point. So
Hmm.
I thought that was really interesting. Let's move on to Disney, man. Disney reported a strong fiscal second quarter result for 2025. I mean, they beat Wall Street expectation like crazy. So their revenue, $23.6 billion. That's a 7% increase year over year. The net income was $3.3 billion. That's up from 20 million loss in the same quarter last year. The EPS was 1.4, 1. $1.45. That's a 20% increase year over year. Beating expectation, guess this, $1.19. $1.19 was the expectation, and they beat it by like they are at $1.45. So, what, in your opinion, like how is Disney even able to do this, man? Like be able to kind of get all these crazy numbers, and we've seen the stock run up like crazy this morning too.
To me, I think the Disney numbers, the expectations were so low, in my opinion, that it was an easy beat. That's how I
Yeah.
look at it.
Okay.
I think Disney as a business has a lot of restructuring that they have to
Right.
figure out. I think their execution on the streaming front still needs work, and I don't know if they've
Oh
completely
yeah.
figured that out yet. I will say I think they had some growth in that part of their business, which I think was good. But their execution of the streaming business has been very underwhelming to say the least.
Mm-hmm.
Does this quarter kind of get a some hope that maybe they figured it out? Maybe. I heard that they're looking at building a new park in Abu Dhabi.
Yep.
So, that's a good thing if they're spending money. But I think for the most part, um, they still, in my opinion, have a lot of work to do.
Mm-hmm. Mm-hmm.
And I will give Disney, I'll use Disney as an example. Of if you're going to be an investor and just buy stock and just hold stock, and you're not going to listen to earnings calls or anything like that, that can be a dangerous game. And I'll
Mm-hmm.
give you Disney as an example. So if you go back 10 years, and let's just say you bought Disney stock, right? You didn't rebalance, you didn't sell anything. You kind of just held the stock on the notion that stocks always go up long term.
Go up. Right.
I'll tell you what, over the last 10 years, if you held Disney, you've lost money.
Yep.
You've lost money over the last 10 years. Now, you might have made some money on the dividend. I think they paid a dividend. I don't know if they're
Yep.
still paying. I don't know if they're still paying their dividend. But if you're just a buy and hold investor and you did absolutely nothing with Disney over the last 10 years, you have lost money.
Yep.
So to me, if you're going to be a stock buyer and hold individual positions, you have to have a strategy around when you're going to sell,
Yep.
when you're
That's
going to
important.
hold. And to me, you have to know what is going on with the business.
Mm-hmm.
Because if you held Disney, you probably missed out on other really good opportunities out there over that 10-year time frame if you just
Like
wanted to just hold
Netflix.
Disney, like Netflix,
Mm-hmm.
Nvidia.
Mm-hmm.
I mean, you could have just held the index and you could have done way better than just holding Disney.
Yep.
So to me, if you're an investor and you say I want to buy individual stocks, you have to be in tune to what is going on with the business. You
Right.
got to look at the balance sheets, you got to look at the reports, you got to listen to earning statements. That's all part of the process of being an individual owner of a stock. Because remember, you're owning a part of a business. If I asked you personally, hey, give me $10,000 so we can invest in this business, you're going to ask a bunch of questions about
Right.
what's the business, how's it doing,
Right.
how am I going to make money. All of those things factor into making that decision.
Facts.
So if you're going to buy individual positions, you have to have that same mindset. You can't just go in there and say, I'm going to invest in stocks because stocks always go up.
Mm-hmm.
Nope. Now, if you buy an index, completely different because that's diversified, right?
Right. Right.
You know, if you buy the S&P 500, you have 500 different companies that are powering the growth of that index. You buy the Nasdaq 100, you have 100 companies that are powering the performance of that index.
Right.
So don't be a blind investor when it comes to individual stocks, because if you close your eyes and you're not paying attention, you could have a position that you've held for 10 years and
And yeah,
made no money.
yeah, you definitely had a bad year in 2021, 2022, and yeah, this year. What did Kenny Rogers say? It's like you gotta know when to hold them, you gotta know when to fold them, you gotta know when to
Hmm.
walk away.
Yep. Yep.
So
And my thing is like, Disney has, let me pull up a 10-year chart real quick. Let me switch this. Um, monthly, let's go to 10 years. Okay. So if you've held Disney for the last 10 years, let's just say you bought in 2016 when the stock was trading anywhere between $86 to $102, right?
mhm,
At one point, the stock got to $203. Now, as an investor, right, you have to make a decision. Do I sell some and reinvest it in other places, or do I just continue to hold?
right.
And to me, if a stock has doubled, that might be a good time to say, let me trim some of my position.
Mhm,
So you can't just go in with the blindness of just, I'm just going to hold this stock forever,
right.
especially if you start to see signs of weakness in the business. You can always put a stop loss as well, right? So let's say you bought it at, I don't know, say you bought it at 95, 96. The stock runs to 203, right? And you're like, well, I still like Disney, but I don't want to sell it. You could probably put a stop loss at like 170, 190, 160 to say I'm going to start trimming if it starts to come down from that $203 price.
Right.
So again, If you did that, you're probably in better shape than the person who just held Disney for 10 years and did absolutely nothing.
Hmm.
So always have a strategy around when you're going to start to sell and what are your plans to hold if you're buying individual positions. You can't just turn a blind eye and just close your eyes for 10 years.
Right, right. But
So
you also got to know what business you in, like
exactly,
what the stock you invest in,
exactly.
like what does
Yep.
stock in the business. Because if you look at Nvidia from like 10 years ago, you would have probably you'll be a very happy person right now if you would have bought Nvidia 10 years ago. You know what I mean? Versus versus Disney, right? Because like
Hmm.
Nvidia and Disney, two different, completely different businesses.
Businesses.
But you got to understand what is the catalyst, what is the outlook, and jumping onto those calls and understanding what the company's doing and the innovation they're doing and what industry are they on, what sector are they on. So it's like understanding those things will allow you to kind of figure out, should I just keep holding this because I believe in one leadership that's in the company, right? That's the
Hmm.
biggest thing with any company, like the leadership. If you don't believe in the leadership, they don't have a good site, track record. Sometimes it's not a good company to be in. But
Hmm.
again, like paying attention to all of those things will definitely help you, like whether you should hold, whether you should sell. So
And another thing you also have to pay attention to is the macro environment of what affects that
mhm.
business. So NVIDIA is a B2B company.
Yep,
Their customers are businesses. Disney is a B2C company where
BTC company. Yep.
they're most of their customers, I mean, are consumers like us.
Hmm.
And you also have to understand that Disney sells things that people spend with their discretionary money.
Discretionary money.
It's
Yep.
not a need. You're not going to Disneyland because you need to. You're going to Disneyland because you've got some extra cash that you want to spend, or you're putting on a credit card, and it's a discretionary purchase. The cruises, the movies, all those things are discretionary. They're not selling a
Hmm.
product that people actually need on a day-to-day basis. So when you look at what affects their customers over time, that can also affect the business.
Right.
So, that's why I always tell people, like, I sometimes see people who have like $5,000 or like $10,000 invested, and you look at their individual stock portfolio, they have like 25, 30 different positions. And
Right.
I'm like, you're slicing the pie into too many small pieces.
Right.
You're better off looking at 3 to 5 really good companies and investing in that with your 5,000 or your 10,000 rather than taking that money and investing in like 25 or 30 different companies. Like
Correct.
you're you don't have the scale to diversify that much, to me, in my opinion. Like you'll
Hmm.
see somebody who has like 5 shares of this and another 5 shares of this and 1 share of this and like 3 shares of this, and like to me at that point it's like just put your money in the index. Make your life easy.
Much easier that way.
Yeah. So, to me, if you're not able to put like $5 or $10,000 into one position, in my opinion,
Hmm.
don't slice the pie up so much. You're better off just holding an index, in my personal
Facts.
opinion. In my
Facts.
personal opinion. So
Man. So another news that came out that I wish it was Intel and not AMD. AMD. So today, Amazon have purchased 822,234 shares of AMD. That's valued at approximately $84.4 million. So, what is Amazon doing exactly buying AMD rather than going with NVIDIA? I mean, first of all, what are your thoughts on this? And second of all, how is this going to impact NVIDIA? You know what I mean? Like, because I think this partnership is mostly for AI chip innovations and all this stuff. So how come they didn't go with Nvidia? I don't understand. Or how come they didn't go with Intel? You know what I mean? Or TSM, but they chose AMD particularly. We probably don't know why, the reasons why, but it's like, how does that impact the overall market for AI chip when it comes to Nvidia?
So TSM is probably involved because remember, TSM builds the chips.
The
AMD is
build chip. Yep.
designs.
Yep.
They design. I wonder why they did not go with Intel, because if I'm not sure, Intel designs and builds.
And built. Yep.
I think they do both.
Mm-hmm.
So I know over the last couple of months, we've been hearing a lot about Amazon's play um, on AI.
Mm-hmm.
I think they've been working with Anthropic.
Yep.
Yep, they've been working with Anthropic. They're working with some people to give some competition to some of the other AI players behind the scenes. Um, and I want to say that they probably went with AMD, maybe because of cost, maybe because partnering with an NVIDIA probably would have cost them more money. So they bought a pretty substantial stake in the company.
Right.
I wonder where this goes in the next 5 to 10 years. And from what I'm thinking, they probably want to develop all of their stuff in-house.
Right.
Um,
The
and
other thing is like I think AWS right now, I believe they're using NVIDIA's chips. I don't think they're using AMD or anything else. So
mm,
maybe this is a way for them to diversify and have somebody else that be able to supply in case something happened with NVIDIA or they decide to go haywire and charge them triple for the chips.
yeah, so I wonder where they're gonna go with this. But I think Amazon silently is starting to diversify their business
Yep.
outside of just the store.
Yep.
And I know the way I think of Amazon, Amazon knows that AWS is their biggest growth driver.
Yep.
And I think they're trying to double down on that business as far as what they're trying to be laser focused on.
Yep.
We saw Jensen Wong was at the ServiceNow conference, and he's been saying that the AI story is the big story of the future. And
Yep.
there's going to be a lot of competition, and there's going to be a lot of players in that space moving forward. And they're trying to, I think he used the word like, what did he use? He's trying to turn NVIDIA into like an AI infrastructure company.
Yep. Yep.
So it sounds like he wants to make sure that they have their hands in almost everything AI.
Yep. Yep.
So we'll have to wait and see how that plays out. But
Yeah. I think I like what he said though. I mean, I think that was a direct message to probably like the Trump administration. Like, look,
mhm,
if you all stop us from partnering up with China or any other country, China is not. He said this several times. China is not far off from dominating the AI market. They're not far off, right? He kept saying that if we stop right now supplying them or being the foundation which upon all the other world build the innovation of AI, because AI is gonna keep increasing, but Jensen wants to be Nvidia to be like the foundation that everything else gets built on top.
mhm.
Because if you do that, you have to work with Nvidia in order to build anything else on top of your AI. Otherwise, you got to start from scratch, right?
Yeah.
So I think for him is like let's not work with other countries. Let's work with them and let's make our chips that's made in the US or whatever the dominant chips that everything else is built on top of it, right?
Hmm.
And I think there's like a $400 billion or something like that that's out there for AI chips. I think it's a lot more actually, but I mean that's a lot of money, to be left on the table. And I agree with him. China is not far. China is not far. I mean, we saw what happened with the deepfake situation they had. Even though that was built using Nvidia chips, also, but the cheaper version of Nvidia chips, right? The older version. So, I mean, they're not far.
And this is the thing. It's like if China can do what they're doing with the older version of NVIDIA chips, like what makes you think that if you stop selling stuff from them that they're just
Right.
all of a sudden just they're not gonna innovate?
Right.
I mean,
Right.
I don't know, man. People people got to stop looking. There's some people in the US that need to stop looking at China as a third world country.
China is not.
China is a freaking superpower. Like
They're
let's
not
let's
small.
call it what it is.
They're
China is a
not small.
superpower.
Yep.
So to me, the way I look at the Chinese economy, their policy in innovation is if there's a will, there's a way.
Yep.
We'll figure it
Yep.
out.
Yep. Yep.
And they promote that in their education system. Like we'll
They're
figure it out.
they're definitely the blueprint on how to quickly make your country the most dominant country in the world. You know what I mean? When everybody said, "Oh, we don't want to do the little jobs," China said, "We'll do it."
Mm-hmm.
When people couldn't figure out how to mass manufacture something, China said, "We'll do it." So they literally took all the jobs that nobody wants to do, and they became good at it. And guess what? They have made a great country out of it.
Mm-hmm.
And yeah, they're not small, man.
So much of the world is dependent on China now.
Yeah, yeah. I mean, you
So
saw you saw the TikToks and the Instagram posts where they were making fun of us. They're like, if you look at my house, I have nothing here from the U.S., but look at your house. You probably have 99% of stuff all from China.
I mean, just
And
look at
they're right
TikTok.
about it. Yeah,
Just look at TikTok.
yeah,
Look
yeah.
at TikTok. That is a Chinese company
Yep,
that
yep,
developed that platform.
yep.
And look at the adoption of that platform. And
Mm-hmm.
the moment the US was about to ban it, did you see how many people were like
Yeah,
scared and
protesting
worried
out there. Yeah.
and protesting?
Mm-hmm.
Like,
Mm-hmm.
look at TikTok.
Yeah. That's a good example.
China basically said, the US came up with Facebook, the US came up with MySpace, the US came with Instagram.
Mm-hmm.
China said, let's develop a social media network that caters to the short attention spans of humans.
Yeah.
That's
And
all they did.
literally, really, really short.
That's it.
Yeah.
All they did was just take the, I mean, people's attention spans these days are low as
Yeah.
you know
Very.
what. Like, let's not even sit here and play.
Less than 10 seconds.
They said, let's create a social media platform where our focus is to get people's attention for that short period of
Mhm,
time. And
mhm.
just look at what that platform has done.
Yep. And what people don't understand is they pay a lot of money to the creators. They pay
Yes.
like people were crying because
Oh yeah.
TikTok pays them a lot of money. They had no idea what they're gonna do if TikTok goes away.
Mm-hmm.
No idea. Nobody wanted to go work at McDonald's or go work in whatever it is. Nobody wanted to do physical work. People wanted to be out here doing their content, doing their dances, doing their whatever stories they tell. That's what people wanted to do. And a lot of those people are young people. They have no other skills but to be on TikTok. So I mean, it gives them opportunity for you to make a couple of $1,000s a month. Some people make 10, 20, $30,000 a month. You know what I mean? That's a lot of money. And if all of a sudden for a country like the USA, like we're taking this away, you're taking people's livelihood away. You know what I mean? Yeah.
On that note, I want to go back to something I heard today from Ken Griffin, who is a
Mm.
hedge fund manager. And all of this talk about bringing back manufacturing jobs to the US, right? Trump and Howard Lutnick are saying that's what we want to do. We want to bring these jobs back to the US.
Mm-hmm.
Ken Griffin said, you know what the problem is going to be with that? Nobody wants those jobs.
Nobody, literally. We are spoiled in the
If
USA.
if if you look at, I mean, we have shortages in high paying jobs in the US, like nurses and doctors and things
Yep.
like that.
Yep.
A lot of people, right? If you want to know what job is probably growing the most, to me, a lot of people, I'm pretty sure now, they're like, I just want to be an influencer.
Right. Yeah. Yeah.
I want to be an influencer. That space is growing and it's getting very oversaturated, in my opinion.
Mm-hmm.
So let's just say you bring all of these manufacturing jobs back to the US. If you don't have people who want to fill those jobs, what's the whole purpose?
What's the whole purpose? Yeah.
Ken Griffin said that the US job market has changed over the years, where manufacturing now is such a small percentage of the labor market And really, I think he said that the people did a survey asking like, would you quit your current job to take a manufacturing job? And the most of the answer to that was no.
No,
So
no.
if there's no demand for these jobs, why are you forcing
Hmm.
people to bring them back?
Right.
And then the people that might want to fill those jobs, like immigrants, you're telling them that they got to leave.
They need to get the hell out. Yeah.
So
Yeah.
that to me, when he talked about that, I was like, that's a very good point.
Yeah. Yeah. But you also got to think about it. Like those manufacturing jobs are short lived, right?
They can be. Yeah,
At some point, these are all going to get replaced by
they can
AI,
be.
by
Yep, they
automation,
can be.
something. You
Yeah,
know what I mean?
yep.
We saw that. We saw a lot of companies figure out a way to eliminate the labor
Mm-hmm.
person because employees are the most expensive part of the company and liabilities also.
Mm-hmm.
Like if a company can figure out how to do your job without you being there and be able to get rid of you, guess what? The investors will be happy because they're saving on on what
On
do they call it?
cost.
They call them FTE. Like they're saving on the FTE. Like you out of there. You know what I mean?
Yeah.
They don't need you anymore, and they
Mm-hmm.
will have no heart about it. They were like, tough luck. You know, see all the layoff and all that stuff. So, but that's one thing too. Is like I think what the US needs to do more is literally focus on. I think we need to put a lot more power into education, right? I think if we really want to scale up this and change this labor market that we have, we need to put a lot more effort into education. Educate our kids more about AI, educate our kids more about technologies, and maybe even like do some type of program with China and be able to kind of like do some type of cross, training and stuff. But it's like, again, we, with
There's no way the U.S. is going to partner with a communist country.
no, that's exactly what I was gonna say. I think there's also the fear of spying on our technology and
Mm-hmm,
sending that
mm-hmm.
like so
Yep.
it's like the fear is gonna keep us from literally being able to exchange information, right? But overall, like I think we need to put more. I really think we need to put more effort into educating our kids because in the next 10 years, bro, I feel like the US is very, very, very behind when it comes to like technology and all this stuff. We can't even fulfill some of those jobs that companies want. They have to go
Nope.
abroad and hire them. So
Mm-hmm.
yeah.
So we'll see how this whole thing plays out. But like I said, I understand the desire to bring more jobs here to the U.S.
Yep.
But again, I will say this: if nobody wants them, well, what's the point?
What's the point? Yep.
Yeah,
Yep. Yep.
because there's a lot of people who'd rather be influencers than work in a
Yeah.
manufacturing.
Yeah. Absolutely. They'll rather put in 12 hours on TikTok dancing, doing whatever they gotta do, than having to go and listen to a boss, bossing them around, telling them to do
Hmm.
stuff, having to be in a building for half of the whole day, like no, they making good money being on TikTok.
Yeah.
Literally, you
So
know. You can't
everybody
beat
wants.
that. You can't beat that.
No, yeah.
Or on top of that, we have the gig economy. You have people that, hey, I have a car, do Uber, Dash Door, or DoorDash or whatever. It makes some money that way.
Hmm.
So, but anyways, moving on. This week, I think tomorrow we have the initial jobless claims. Let's see what that number is going to look like at 8:30 a.m. Eastern. There's nothing really significant standing out except we have a bunch of Federal Reserve speakers that's going to speak on Friday, starting with Michael Barr at 5:55 a.m. Eastern, all the way up to 7:45 p.m. Eastern. So we have a bunch
Is
of
Cash Kari talking this week?
Shkari. I don't see him on here. No,
Okay. Okay.
I do see Barr on here. Goolsby's on here, Barking, like the regular folks. I don't
Okay.
see Kashkari on here though. Kashkari, I think he's in Michigan, right?
Cash Kari, I think Minnesota.
Minnesota. Okay.
I think. I'm not sure. But
Yeah.
yeah. He's the
But
he's the
yeah,
one that he's the one that usually sounds the most bearish most of
yeah.
the time.
So we'll see what these folks say. I doubt any of the stuff they're gonna say is gonna move the market, but
Yeah.
we'll see.
Yeah.
But
Futures are moving higher now, I'm seeing.
okay. But any advice going into next week? I mean, this ending this week and stuff. So what any insight you want to give?
At this point, no. I think that again, I think that the one thing I will point out is if you have been dollar cost averaging on down days in this market, you're in really good shape.
Mhm.
So I will say that if you've been doing it, continue to do it. But again, you always, because there's a lot of macroeconomic uncertainty, and you even hear that from the Fed.
Yeah,
So if the Fed don't know what's going to happen, chances are you don't know what's going to
you
happen.
don't know.
But stick to your plan. Even if there is a major pullback that we do get for whatever reason,
Mhm.
don't let that scare you from thinking of the long term um, objective of buying stocks. Now, I'll also say this: if you're a trader and if you're not taking some of your profits and reinvesting that into a long term portfolio, you're really defeating the purpose long term.
Mhm.
You're really defeating the purpose long term.
Yep. Yep.
So if you are a successful trader and you are doing well, do not neglect taking some of those profits and reinvesting them into a
We're
long-term
investing. Yep.
portfolio.
Yep.
So
Yep. Because
I'll leave on I'll leave on that note.
that's more peaceful. With that being said, it is a wrap here. Thank you again, guys, for joining us at the Wall Street rundown. God damn, I'm tired. But we'll talk to you guys on Friday, and we'll see how the market does, how the market closes on Friday. But as of now, I don't see anything crazy happening unless we get some crazy news or Trump start talking.
Yeah, I
But
don't know what happened, but futures went straight up. If you go to futures and look at the 5 minute chart, you'll see a big bullish candle on NQ.
actually on NQ right now. Oh, right now?
Yeah,
Interesting.
I don't know what happened, but there's a big bullish candle on NQ right now.
See if somebody says something or some news drop off. But
Yeah.
we'll keep an eye on it tomorrow morning and see how we open up. And yeah, with that being said, y'all, have a good night and we'll talk to you guys on Friday.
See,